Hiya traders, my name's Anthony Beardsall. I'm a trader and coach at Excellence Assured Trading Academy, and it's my pleasure really to have you with me today because I'm going to talk to you about some fundamentals and some things that are vital in trading. And I want you to be assured, first of all, obviously, I don't know what you know already about trading and who you've been watching, who you've been reading about. And so we're going to start basics first and start from scratch almost. But I want you to know that trading is a methodology. It's not random numbers. It's a methodology. It is not a spin the wheel and see what we get type of system. It's not in that way random. It's a methodology, and the good news for us is that if you have a methodology, you can repeat the methodology, you can replicate the methodology, and that's how you become successful as a trader. You learn a system that is a good system and suits your requirements in terms of time, in terms of available capital that you may have, that type of thing. And I specialize in short-term trading, short-term day trading, and I'll trade the 1, 2, 3, 5, 10, 15 minute charts more than I will the daily and monthly charts. And there's a methodology that's the same for all time frames. And that's what I teach people, and that's what I work to myself. The methodology starts with you have to have a point of exit for a loss, you have to have a point of exit for a profit, and the profit needs to be bigger on trades than the potential loss. But you have to learn to take losses, which is the hardest thing to get your head around, I think, in trading. And I hear stories of people not exiting for a loss where they should do, and that's disaster waiting to happen. If you exit for a loss and you lose 5 points, let's say, and that costs you $25 or £25, that's not the end of the world when you have potential gains that may be significantly higher than that. Repeat losses with no wins, that's a disaster. So you have to have the probability right in a trade as well. And you'll know that the videos that I post show you that I take repeated trades, frequent trades, and they all look very, very similar. And that's because I'm following a specific strategy, and it's the gold system, Ants, gold trading system, that I'm employing and that I'm illustrating to you guys so that hopefully you can learn it and be successful yourselves. You know, if you follow the strategy, then you follow it 100% and you don't waver off to other strategies, because you need to get used to things within a strategy, within a methodology. You need to understand it and feel it. And that's what I hope that you are doing right now, is, you are following a methodology that makes sense statistically and in terms of, what you believe about the market. So you'll know from Ant's Gold System videos that I've placed on YouTube previously that I have a very, very small risk associated with my trades, because the reason for that is because I wait for a candle to, let's say, open here, go down a tiny amount, and then when it goes green, I enter. Okay, the market will do its bit as long as the entry to the candle is at the correct place in terms of value and in terms of momentum in the market. Okay, so I place exponential moving averages on my charts to give the price some sort of context. And you need context for a methodology. Without context, there is no methodology. And, you can't be a successful gardener if you don't know where a garden is. Sounds obvious, but there you go. The brain is something that I've been working with professionally for 30 years now. I've been helping people improve their performances. I've been helping people improve their lives through better use of their brains. And so I'm very familiar with IQ tests. And so just have a quick look at this. This is an example of the sort of questions that you get in IQ tests. You can answer not you, but you can answer any of these riddles as long as you understand what the riddle is getting at. So there is a methodology in answering IQ test questions, and it requires you to understand, in some cases, mathematics, and it requires you to have come across something similar in the past, and therefore repeated completion of IQ tests will help you win. And that's mathematics. That's how it works, and that's school. School teaches you certain things, and it repeats the learning so that eventually you get it and it becomes second nature to you. And that's the same in trading. So that's good news, isn't it? Because it means that if it can be done, if charts can be read and there's a methodology and you've got a brain, and I reckon you have got a brain, then you can do this as long as you're sensible in terms of the strategies that you use, that you're consistent with the strategies that you use, and that you take your losses and exit for a profit when there is a profit to be had in your trade. And as long as you start trading with sufficient money behind you in terms of, paying for your living, paying for your food, your accommodation, the roof over your head. If you're worried about food and accommodation, then that is going to be problematic for you with your trading. So a little bit of financial security is required in trading. And once you've got that, then you can start focusing on learning the strategy. And the tendency with the brain, because the brain is super impatient, the tendency with the brain is that it will be impatient and that it will want you to do things now and start earning straight away. And it just doesn't work like that in trading, and it doesn't work like that in any other career that you might endeavour to complete. You are required to have some background knowledge and some experience in seeing the patterns involved in the skill. And in trading, that means observing candlestick patterns. And you need to see them through to completion. So watching charts, not too much of a problem on a 1 minute chart, more of a problem on the higher time frame charts, because the candles take the length of the time period to complete. And so the 1 minute chart allows you more opportunity to learn and to repeat the learning. And that's one of the reasons why it's useful to trade it. And also, you haven't got your money at risk for long within the 1 minute trades. But honestly, you shouldn't start trading until these patterns are lodged in your brain and you're fully in tune with the risk, the reward, and the potential probability within the trades. You need to have that experience within you to start trading. So let's have a look at these trades that I've got lined up for you, just to show you what type of thing that you'd be looking at with the gold system. Thanks for joining me. Let's watch this. Here's the first trade. and this is the setup. Okay, so as you can see, price came up after having gone down previously, came up, went through this river of value here between the 8 and the 20 EMAs, and then shot back down. Now that's a clean break of the river, a clean crossing. And the crossing's most relevant point is the 8 EMA. So it zipped through the 8 EMA. So this is good to go short because price is here on the open of the next candle. It'll be here and it's close to the 8 EMA. And what I need now, so it's the probability is built into this trade at this point in time, and what I need now is I need the open of the candle to set the risk. Okay, so what I'm going to be looking for is I'm going to be looking for the market to go green, stop, go red, and then start going down. You can see this is quite a large candle, and I'd expect the next one to be of a similar size. So I'm ready at this stage. In my mind, the probability is set, the trade is set up, but if the price goes up here and then starts going back down, there's no trade. If it just starts going down, then there's no trade. I'm waiting for the risk to be set. If I don't have risk set by this new candlestick, then my risk is right up here, and that's too high. So I need risk to be set by the next candlestick. I've got 2 points of resistance to higher prices in here, and that's the 8 and the 20 EMA prices opening below them and close to them, and the high of the next candle, if there is a little spike up, and the open of the candle, if I enter just below the open of the candle, will set 2 further points of resistance to higher prices. And so this is what happened next. So you can see here that I did get my little bit of green, and then it opened here, went green, and then started declining. So the risk was this, just needed to see a little bit of red. So in here, stop up here, small amount of risk, and about 3-to-1 reward in this trade, seeing the candle out to the end. Okay, this is the type of trade that I take all the time. There's value involved here, there's momentum, as in this candlestick, there's where the price opened, there's where the previous candle closed, of course, and there is also the requirement that I have of a little candlestick. This candlestick could have just gone up to here and that would have been fine. It could have gone up to here and that would have been fine, and the risk would have been lower, but it didn't. It went up here, and that's even better because it's tested the resistance levels, failed to go through and gone down. Okay, no trades again until here. Okay, no trades again until here, and this crossed through the river of value and came back down. That there, with that big red candle setting the pattern for the next candlestick, that's a superb signal candle, and I got my requirement at the beginning of the candlestick and I scalped for the remainder of the candlestick and exited at the end, which is uncomplicated in terms of trading strategies. I'm sure you'll agree. And it netted me 3-to-1 reward to risk. And if you can get 3-to-1 on each trade, there or thereabouts, 2-to-1, fine. and anything higher, obviously, all the better. Then you're going to be all right. Right, is the next one. So we've got a higher time frame here and trading time frame here. I'm not mentioning the time frames because it's irrelevant, it's totally irrelevant. But this one, fair to say, this was a trade in here, crossed through the 8 EMA, the all important EMA is the 8, and there was enough room after the wick came in to go long and exit at the end, but you can see that there was resistance here. Now, as prices moved on, it's now closed just above the 20 EMA, and therefore your risk set by the little candlestick and your reward is this, and that's again superb reward to risk. And then this one, risk being tiny down there, reward being the entire green on that candlestick. And you don't need many of those trades with that probability that I'm setting through the methodology of reading the charts. I'm using value, which in terms of price is absolutely essential, using value involved in trading, and momentum as well. Price going up, opening the market here and shooting up there. So all good. You need a methodology, and if you're looking for one, then I'm the person to give you one. And I've tested these trades for years. I'll be happy to share them with you and the methodology behind it. So my name's Anthony Beardsall. I'm really grateful for you listening and watching. And if you want to subscribe to the channel because you want more, then do that. Otherwise, I'll see you on the gold system. Thank you for watching. Bye for now.